Welcome back. So, will the bulls manage to prevail once again? That's the question as we are gearing up for the Indian Market Open. We have Prakash Diwan with us. Prakash, happy Monday to you. I don't know how happy it's going to be depending on positions, right? But let's start with Britannia. The reason I'm asking you about this stock is market positioning. Stock hasn't done much. Generally, we're going to be in a risk-off mood today. And then we've got earnings over the weekend. What's your call?
Good morning, Survi. So thank you for the lovely wishes on a Monday morning. But yeah, this week's going to be tough. And what the global markets are telling us is that it will be better off focusing on stock-specific activity within our markets. From the results season, yes, Britannia has been, the expectation always tends to be high when you come off a good, market level of sorts. And from that perspective, there was this issue about certain margin reduction and all of that. But let me tell you, these are companies that are actually going to be moving much more significantly given demand, revival rather than just a quarter here and there. And if there is any indication from whether it's a monsoon, whether it's a spending of the government, there is going to be adequate demand revival happening for most FMCG plays. Britannia is probably not as rural facing as probably a Dabur or an HUL could be. But I would believe FMCG is going to be a very interesting space to be in. You may not be able to hide all the time, but at least you'll be better off than being in a lot of the other frontline economy-facing sectors. So from that perspective, these numbers actually give you a very good entry point. The risk-reward, in my understanding, is favorable. Expectations probably were not met, but the numbers are still very good as compared to what they could have been, given the tight input side. Yeah.
Okay. Hi, Prakash. Good morning. Let's talk about SBI. The good news, I think the good part of it is, in the last two sessions, the stock corrected from around that 890 rupees to around that sub 850 rupees. So if there was going to be a disappointment, part of the disappointment is in the price. I think a couple of factors could weigh on the stock. That was the credit cost perking up a little bit. And also the deposit growth isn't as much. But otherwise, things look good. How are you viewing the stock at around 850 rupees?
Good morning, Rajat. So, very correctly said, there is nothing which is dramatically wrong. But yes, you could kind of, again, see some sort of a mismatch given expectations. But if you look at what SBI has been doing in this particular quarter every year, last 3 years, let's say, there have always been slippages which have been very stark, which has not happened. There's not been too much of provisioning, so the PPOP is fairly decent. And I would believe SBI is standing at the cusp of a growth cycle where as soon as credit expansion happens, and we are right at the end of that interest rate peaking cycle, and the cost of deposit will probably not go up significantly from here at all. But if credit growth picks up, these numbers tell you that SBI will definitely make the grade. So from the larger banks, I think even compared to the private sector banks, the SBI numbers are fairly distinct. The growth slowdown or sluggishness and all is across the board. So I don't think there's anything exceptional about negative about these numbers. But yeah, the market will probably react negatively and give you that. At these levels, the risk reward, probably 800 levels, closer to 8, it becomes even better.
With us, Prakash, so, on a day like today, just sort of stay on the sidelines, watch the action. And if you're leveraged, then reduce leverage. I mean, should be reducing leverage coming into this week, but if not, do it. What else, Prakash? What else should one do?
So, more importantly, Prashant, given where the market is, I think very soon you'll also start having traders struggle with margins. We've got a very rapidly reducing margin profile of a lot of stocks that the exchanges have already announced. So we've seen that cut happen, go to 50%, then probably go to 25%. Now, eligible stocks on the margin trading facilities are actually going to precipitate some of this sell-off. So we've not seen DI's sell-off as yet, but you'll probably have the retail segment adding to this fall. I would definitely love to wait for this cool-off to happen. I mean, we've been waiting for this for quite some time, right? I mean, it never came about, but once it does, it'll probably be very precipitous, is my guess. So the next couple of months, if not just a few weeks, could be the time to look for value. But given the way there's so much of capital expenditure happening, whether it's Adani setting up a new cement unit in Bihar, the new high-speed corridor getting announced, you'll probably start having incremental news flow, which is positive, but right now will get ignored and start getting acted upon probably a few weeks from now. So Yes, absolutely, you're right. Wait on the sidelines, but be ready with what you want to buy, given the domestic salience, and don't get too worried or panicked about this. But the sectors that look like still promising enough in this fall would probably be pharma, would probably be a lot of FMCG and some infrastructure names. So that's the pocket that we are very, very keenly watching for.
Okay, by the way, just want to point out some stocks. LIC Housing, of course, anyway, Vamakshi was telling us the numbers are looking really weak, that margin compression is crunching. Watch out for Samvardhana Motherson. This news, as far as I remember, I think came after market on Friday. Now, they are buying 34% in Motherson Auto. Some sort of a, group-related transaction, but the stock was under a lot of pressure. Now it's cooled off. That first cut was about 9-10% lower. Now it's about 3% lower. So let's see how that plays out. Overall on the market, now it's about a 600-point drop. That's how it's playing out. Okay, so Prakash is going on the basis of results in the last couple of days. Anything that specifically stands out for you? I'm just checking delivery as well, because delivery's numbers are very good. Stock's a little flat right now. Anything that you'll buy purely going on blockbuster Q1 numbers?
I think, except for Zomato, there was nothing in terms of numbers giving you some sort of a confidence that things could continue looking positive. Yes, delivery, of course, we've seen it turn around for the last 4 quarters very distinctly. But I would believe there will be a lot of opportunities, not just on the basis of numbers. Even the Nifty numbers, whatever we've tracked, about 39, 40 stocks that have come up with numbers, the results haven't been too bad, Surbhi. So we still have our estimates at about 1130 on the FY25 EPS, this thing. So from that perspective, nothing much has changed. What's going to change is the PE expansion that we saw, which was so rampant. So I would still wait for the earnings season to completely come to a draw and then probably look at things. But as I said, pharma, Divi's Lab, we probably didn't get to speak about it, but the numbers were pretty good. The commentary is so good. It's just that expectations were too high. So I would look at pharma, some of the FMCG names making a significant comeback, and some of the agri-focused names like Godrej Agrovet and all of those. So these are very specific bottom-up selections. But you'll actually be spoiled for choice if the Nifty comes down about 500, 700 points in the next few days, and that's the time to kind of start cherry picking.
All right, Prakash, that's a good point, right? 39 Nifty companies have reported their numbers, which is more than 80% of the weightage as well as the total profitability. And it appears it's quite good. My only worry is in the mid-cap index, because there the index itself is trading at a sharp premium in comparison to the Nifty. So let's see how it goes. Appreciate you joining in, Prakash, and filling us in with all that analysis on a whole host of stocks.